Raising rates, and let me tell you, inflation has not peaked. Everything Powell said, what we expected going into the market, the puts, everything in between. You've come to the channel where we are the most biased viewpoints on the market. We tell you when we're wrong, we show the losses, we show the gains, and everything in between. We're gonna talk about the Nasdaq 100, SP 500, and the Dow US30. We're gonna talk about some of these big companies and where we're moving and the stocks that I am watching. Before we get into that, I ask you to consider doing two things: liking and subscribing. I've been telling you every day what I see happening, where I see us going, the exact stock picks I am playing. Go check the tape. I don't delete anything. Check them out because I'm telling you where we're going now and what to be expecting. Let's get to it. Now, we need to talk about exactly what was said. We can look where we are on the charts, what happened pre-Fed meeting. We talked about lows from this week, right? We saw what happened. We started bouncing here, rejecting again yesterday, ultimately dumping, right? Massive drop. What happened? What was said? This is the Fed statement. Now, this was released prior to the report, right? When they came out, answered all the questions, etc. This is the report right here. And then they came out and answered questions. You saw a little bit of a bounce, but this gave you your answer. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the longer run. In support of these goals, the committee decided to raise the target range for the federal funds to 3 to 3/4 to 4% total. The committee anticipates the ongoing increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time, stating what? That their main goal is to get it down. They're not talking about slowing yet, but do they mention it? In determining the pace of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy that lags. Monetary policy affects the economic activity and inflation and economic and financial developments. In addition, the committee will continue reducing its holdings of treasury securities, the tightening aspect, and agency debt and agency mortgage-backed securities as described in the plans for reducing the size of the Federal Reserve's balance sheet that were issued in May. The committee is strongly committed to returning inflation to its 2% objective. Now, people said that this was a secret message into softening. This was stupidity, pure stupidity. They clearly state what their goal is: get inflation down. Going into what happened, what were the main issues that told us what was going to be happening here? It's really simple. If you get in on the day, what happened here, I told you as well. Non-farm employment continue to go up. Boom. This is not good. You do not want to see these employment levels going up. We talked about on Mondays or Sunday night's video. Go watch the video right here, I believe. No more pain. This is the one that will give you the answer. I went into what was happening specifically with the private sector and their jobs. I said that private sector was doing good, but if you look at the overall market, unemployment is still too low. It has to go up. What did the Fed say about this? As you get in here, we can read about it. Wages are currently moving sideways rather than downward. Vacancies have not decreased. They need unemployment to rise. However, the broader picture remains the overheated labor market. We continue to look for signs of gradual labor market, but nothing stands out to me. Some rays of light in the data on the private sector. Again, I went over this. You can go watch the videos. This is showing you, not to tell you that I'm right and, hip hip hooray that we made money here, right? It's to show you that we're focused on the right points of the market. You need to be focused on making sure you're looking and doing the work where it's going to benefit you, where you're going to make money, because right now time is money in this game. You need to be focused on these big sectors and big focal points from the Fed, because if you're not focused with the Fed, chances are you're going to lose money, like everyone who had calls waiting for this pivot. Go look at all the comments from the previous videos. A blunder in the direction of not tightening risk sufficiently entrenched inflation. This is the first time that we are even somewhat calling inflation entrenched. We are not there yet, but we think if we do not continue this same path to raise rates even higher, this could happen. And what happened from there? Nothing but downside. Okay, now looking at the markets, where are we going? My favorite is NQ. That's why I have QQQ puts. Those things are absolutely destroying. If you don't believe me, just look, not even what I'm making. Don't even look what I'm making. This is what everyone else is making in the Discord, right? All the Q puts, the SPY puts, etc. Everything in here, that's what we're focused on. That's the name of the game right now. There's no reason to get away from it. That's what made us a bulk of our money last month. You don't need to get hyper aggressive. You can sit on your hands and let these trades now come to you. Now, if you weren't able to trade puts already and you're kind of behind the curve, am I saying to jump in right now? No. First of all, you need to do your own DD, but we need to look at exactly where we are. On the 1 hour level, I would argue that we are going to be coming into this demand down here, roughly 10.8 down to 10.7. This will be a major focal point. I also want to highlight where you get rejected at 11.44, the same level we've been talking about. On ES, this looks even more dangerous, arguably. You would have to argue that you have around 37.50, but after this point, you will be coming down to these lows around 36.50 to 36.60, almost 100 points of downside. And then Dow, this is where things really heat up. As you can see here, I would have to argue that you do have a demand in this local region here, coming down to roughly the 32 level, but I would argue that more downside will be coming specifically when we get here into the 4 hour chart. If you look at past this level, we have ranges 31.4, even deeper down to 30.2. These are all major levels, but it's important to realize why Dow is doing so good. The US 30, why is it doing good? Because all of its earnings, specifically Caterpillar, Boeing, these all did fantastic. LMT, they just destroyed. They've been doing so phenomenal. These are the strengths and pillars of the market and oil companies as well. That's what's holding this market up, and that's why ES was performing so well. So when we go into SPY, we're definitely seeing that slip. And again, if you were not focused on these supply levels where we've been trading, then you've just been out of the loop. You haven't been on Twitter. You haven't been on YouTube, because I've been trying to tell everyone what's happening. I wasn't looking to make a quick scalp to the downside, a quick scalp to the upside. We were looking to swing this because that's where the big money is made here. It's not just getting the quick day trade. We are traders here. I'm not a scalper. I'm not looking to make nickels. I don't risk dollars to make nickels. That's not the plan here. I do not function on that type of risk to reward. You need to be making sure that your wins are far outweighing your losses. And if you've been watching the channel for any time at all, then you know just that. Our wins continually outweigh the losses every single time here. I anticipate disgusting downside, and I do believe we will see 52-week lows being tested. Now, SPY, QQQ, IWM, etc. I do believe Qs are the weakest, and that's why you're already so close. That's why we took the Qs here specifically. Now, IWM, I mentioned this one also yesterday. Mentioned you had the sending the wedge. We had the wedge. Remember, if you were here on Twitter, where I post all my stuff as well, come in here. Look what happened. Posted it yesterday, November 1st, right here. Boom, top of the wedge. Guess what happened today? Started breaking down early this morning before the Fed even happened, and then boom, down even deeper. I think IWM has a lot of pain on the horizon also. Now, going into some of the fundamental viewpoints, DXY, what's happening here? Also told you what was going to happen. Look at the 4 hour candle here. Extremely bullish. DXY all the way back. If you started buying puts, when I started buying puts, when DXY was at these lows, you would have essentially caught the top of Qs, 100%. If you were on Twitter, if you were paying attention, you would have saw all of this information before anyone, you would have had the writing on the wall already. Going into yields, how did those perform? The US 10-year, you're mounting and holding. We saw a slight dip this morning below 4%, but continue to make higher lows here. Coincidental? I think not. We mentioned it again yesterday. Look at the inversion. Look at where we're at. Are we still following the key trend? The thing that has helped us, the thing that has showed us the way for months now. Indeed, you are higher lows, almost back to a full inversion, getting ready to push back to the upside. The only question mark here is VIX, because it's moving absolutely pathetic, but I have to anticipate tomorrow we will see some bullish behavior here out of VIX. This was the only kind of question mark of sorts. I do think VIX has room to fly, so make sure you're watching out for that. Now, specific plays that I'm liking, specific plays I love. I mentioned plays yesterday. I mentioned some of the ones I liked. We talked about Microsoft, Meta, these big stocks going to new lows where they're at. Now, what I stayed away from was semiconductors, but I do want to highlight here on semis. You could argue that you are sitting in a bear flag for literally on the daily chart. It's one of the crisp chart that there is. It's gorgeous. AMD looks like it's going to tank. Looking at Nvidia on the daily, get rid of everything. Quickly just take a really simple look here. You could argue it's a little bit extended, but I would say with AMD, this points to more downside across the board. Looking at something like Apple, we come in here. You're already filling the gap that you had established here. You're going back down. They're getting killed. Apple just announced as well, they're shutting down the Chinese factory for 7 days because of COVID. These are big issues across the board, and it's not just what's happening with the Fed. The Fed even said supply and demand is an issue. These are crucial matters, and we're not seeing them slow down. The Fed confirmed every single thing that we mentioned here on the channel, and not one of them has peaked. Now, going into tomorrow, what would I be looking at for downside? What plays do I like? What I want to trade? The only sector I absolutely love, and the last trade that I grabbed of the day for Discord was this one. I personally started establishing my bank position, and I'll show you right now. I got in Bank of America $35 puts for January 20th. That's what was my position here. I'm already very much in the green on my Qs, up. I don't want to mention it right now. I'll mention it in a few days, maybe when we get out of that position. But right now, I believe banks have the most room for downside. This is Bank of America. We can look at something like Goldman Sachs at the same level. Also, we can look at Wells Fargo. This is the most bullish of the banks breaking through this level, but I would still say it's extremely bearish. Citigroup, one of the most bearish, getting rejected almost $2 on the day here. And I think more downside just across the board when you look at all these banks and where they are comparative to the rest of the market. It's worth mentioning also that Jerome Powell said he will be meeting with central banks this weekend to go over the broad look of what they're going to be doing going forward. Also, these are things you have to be looking for and why I am concerned on the market. I think downside is imminent. I think downside is coming. I suspect new 52-week lows specifically on NQ first. I think tech has the most room for downside. Earnings continue to be poor, and I think this will directly impact what's happening here with tech, with the accumulation of terrible earnings, a terrible Fed meeting. I think it's the perfect storm for more blood on the market. I'll continue to be transparent. I'll continue to be posting these videos for you, going over what I like. I'm sorry I couldn't give you more information or more stocks that I'm looking to trade right now. I'll have more stuff posted in the morning for the Discord members and then on Twitter also. Just Twitter is free, so always remember that. Get on Twitter for the free information if you're not ready to make that next step into Discord, right? So I'll see you guys tomorrow. Have a good one.